Okay, so in this video, we're going to be talking about what are order blocks, how could you trade them, and how do we identify the highest probability order blocks, right? Because it's a complex topic, okay? It confuses a lot of you, I know. So in this video, I'm going to clear up all of that confusion, and we're going to really break it down step by step on how you can trade order blocks effectively and how to identify the highest probability order blocks. Okay, so we have a prime example here on USDJPY. Let's break it down. So this is an order block. Let's mark it up real quick. See this? See these series of down close candles right here? That is all one order block. All one order block. So let's note it and boom, right? So there's a few things that we have to think about identifying a high probability order block. So number one we need to consider is an order block is much higher probability when it takes previous session liquidity. Let me say that again. An order block is much higher probability when it's taking previous session liquidity. Okay. So for example, right here, see these series of down close candles? They came down and they snatched these lows right here. See that? See, if you follow my cursor, see those lows right there? See that low right there? The price came down and boom, it grabbed that liquidity. Okay, because we know underneath of lows like this, what's resting underneath of lows like that? Sell side liquidity, sell stops, right? So what did price do? It came down, it grabbed those sell stops, okay, then consolidated for a bit and boom, you get a nice big explosive rip to the upside, right? Think of that like a smart money footprint. So we grab that liquidity. This move right here happened during Asian session. Okay, this was during Asian session. So we had the Asian session grabbed the liquidity from New York session. These lows, this low was put in when? 8:30 a.m. That is New York session. That was the low that was put in during New York session. This move down right here, these series of down close candles came down, grab those sell stops, grab that sell side liquidity, consolidated for a bit, boom, big move up. So we snatched that liquidity. Then we had that displacement to the upside, right? So that's number one. It's always best if it takes liquidity, because we're talking about high probability here. We're talking about the best order blocks, the highest probability order blocks. They take liquidity first. They take liquidity, then they extend, right? So it takes previous sessions liquidity. And another question that I get often is, can an order block be more than one candle? Yes, it can be more than one candle, but one candle is really good for getting more precise with your entries. But an order block, it can be more than one candle. So for example, right here, this is 3 down close candles. One, look at my cursor. 1, 2, 3. That's 3 candles right there, but it's all one consecutive order block, right? So I want you to think of it like this. This is a really good way to think about it. So this is like where it originated. Okay, this is where that selling originated. This is where we opened up at on this down close candle. This is where it started. This is where that move to the downside started. And it came down, it came down, to grab this liquidity, because the smart money, do they want to be buying when price is ripping up higher? No, right? They want to be buying when something is at discount prices. They want to be buying whenever price is headed lower, because they want a good price. Think about it. They want a good price, and this is where price started its descent lower. Let me say that again. Smart money wants good prices. They want discount prices, right? This is where price began its move to the downside. This was the absolute low. This was the price swing. This was the absolute low before, boom, you get that nice move to the upside. This was that last push lower. Grab liquidity as well. Grab sell stops. Remember what I always tell you guys. Wait for liquidity or you'll be the liquidity. Wait for liquidity or you'll be the liquidity. We grab that liquidity and boom, we get a nice move to the upside. That was the last leg lower. That is your bullish order block. All one order block, all 3 candles, right? Another thing is you want that fair value gap as well. this is the next key. We want that fair value gap. We want that displacement to the upside. This is your fair value gap 1. Follow my cursor. 1, 2, 3. All 3 candles. And then see in between this how we got our fair value gap imbalance. Let's note it real quick. So we had that displacement to the upside. That tells us that there was a lot of buying interest here, right? So we had it take liquidity, consolidated for a bit, displacement to the upside, fair value gap confirmation created. And what's next? So now we got our fair value gap. We need our fair value gap in there as well for it to be considered a high probability order block. Another key is you really want your institutional price level in that particular area as well. So when we're talking about institutional price levels, there are a few price points you want to consider. 0, 0, 20, 50, 80. 0, 0, 20, 50, 80. Those are your key institutional price levels. These are the levels that smart money, big money, they like to get their positions at, right? So do we have any key institutional price levels in here? We have a few. Well, we have the 20 level, which is right at the beginning of that imbalance. 20 institutional price level. See that? 20 institutional price level. And then a little bit farther down, we have a 0, 0 institutional price level. Okay, so we have a couple institutional price levels in there, right? So that is the next part of the equation. So so far, what have we talked about? So far, what have we checked off the list? Well, we have that it grabbed liquidity. It grabbed previous session's liquidity. Remember, this was during Asian session, right? Asian session grabbed the liquidity from New York session, right? We grabbed that liquidity. We consolidated for a bit, displacement to the upside. So there was a lot of buying interest in here, as you can see. That was a very explosive move, okay? And that's the importance of that fair value gap. That fair value gap notes that there was a lot of buying interest, that it was very explosive, very strong, a lot of strength. So that's what we saw occur here. And we also have our institutional price levels in here. And it's always best if you have the higher time frame trend backing you. Right, that as well. You want to be trading with the higher time frame trend, okay? And then you want it during a key time session. So your entry, it's best if it's within a key time session. So like a London kill zone, a New York kill zone, all that good stuff. And yeah, so that is what I would consider a high probability order block.